Hello everyone, welcome back. Today I will disclose to you which company is really undervalued compared to other huge tech companies which reported earnings until now. And basically those are the most of those big tech names. Because when I checked, for example, Apple, Microsoft, PayPal, they really delivered great results. Revenue, operating margins, balance sheet, free cash flow, net income, wherever I looked in quarterly results of those companies, they really delivered great results. But when I checked the price of a stock, I really felt like all of those great results and great future, which is ahead of those companies, is already priced in a stock price. So I really don't see stocks of those companies performing extremely well on the long run or outperforming S&P 500 by fat margin. But there is actually one company whose stocks, even after they have delivered great results in fourth quarter of 2020, actually stock price went down and is trading at significantly lower multiples compared to other big tech companies, even though their revenue and net income is growing faster than revenue and net income of those other comparable companies, which is really not logical to me. So I will explain to you what is that company and what is my bullish thesis around it and actually why I'm investing in it. But before we move on, just quick check on my portfolio. You can see that it is well above $53,000. My cash position has stayed the same, but one new thing is that finally Interactive Brokers have fixed this chart, which is comparing performance of my portfolio and S&P 500 return. And as you can see on that chart, S&P 500 is approximately up for about 2%, and my portfolio is sitting just under 6% right now. So I'm outperforming S&P 500 by around 5% in 2021. Let's not waste any time, and of course the stock I'm talking about is Facebook stock. If you remember, last week I actually bought 10 stocks of Facebook, now I own 30 stocks. It is one of my bigger positions. And the last time I bought stocks, they were trading at $260. And as you can see on their last quarterly earnings, their revenue skyrocketed by more than 30% compared to the same quarter of last year. You can see how this hill at the right in terms of Q4 2020 looks like. $28 billion of revenue in one single quarter. Income from operations grew even faster than that. It was almost $13 billion. And one of the most important metrics which I am looking at when I am checking Facebook's quarterly earnings is this operating margin. Because you can ignore first and second quarter of 2019 because Facebook was fined and operating margins went down artificially. But in 2020, operating margins went down quite significantly without any one-time financial events. So I was wondering how low will they drop. So it is really relieving to see that their operating margins have finally started going up. And I think that is a trend which will continue. That's something really important that you should always look at Facebook's reports. And of course, consequently, net income also skyrocketed to more than $11 billion in last quarter. EPS was almost $4. But stock after this actually report went down. They beat, of course, expectations, revenue in terms of revenue growth, EPS growth, etc. But then, as Facebook always does, they gave really bearish outlook and some bearish comments. And literally, they do it after every single quarterly report. I feel like they want to prepare investors to worst possible scenario. So if it happens, they can say, look, we really told you that you should be careful and that you shouldn't expect too much from this quarter. And if that worst case scenario don't actually happen, like it doesn't happen at most cases, they beat those forecasts and expectations on a big way. And that's what they also did this time. They also were bearish. They were saying that, yes, this quarter was very good because of a lockdown, because of a movement toward e-commerce and blah blah, but next quarter we will do good, we will keep growing rapidly, but iOS update at iOS 14 will make our business harder. It will be a lot harder to target users with ads and to serve personalized ads, and who knows how big of an impact it is going to have on our performance. On top of that, they said, look, we also did very well in second half of 2020. Once we entered second half of 2021, our year-to-year growth will come down significantly because one, life will probably start normalizing and people will start going back from online to offline. And on top of that, we will start comparing our results with results of second part of 2020, and those were really good, which means that growth rates in second half of 2021 will be really bad. And of course, investors panicked. Stock actually went down after delivering such a great results in fourth quarter of 2020. Of course, there is always political risk around Facebook, but there is also political risks now around Amazon, Google, and a lot of other tech companies. But only Facebook actually went down. You can see it also here in comments of a management. We expect year-over-year growth rates in total revenue to remain stable or even modestly accelerate in the first and second quarter of 2021. But in the second half of the year, we will lap periods of increasingly strong growth, which will significantly pressure year-over-year growth rates. We also expect to face more significant ad targeting headwinds in 2021. This includes the impact of platform changes, notably iOS 14, as well as the evolving regulatory landscape. They actually mentioned Apple dozens of times during their conference call. That is actually quite interesting. They're saying that Apple will impact on a negative way small businesses which are actually targeting users with their ads, and that it will actually have negative impact on society overall. A lot of people have asked them on conference call actually how impactful with that update around iOS 14 will be on Facebook's results, and actually I didn't feel from answers of a management it will have such a great impact on Facebook in the long run. And at the end, you can see here that Facebook actually is trading at trailing PE of 26 and forward PE of 19. I mean, that's hilarious. That's unbelievable. You can check Google, Amazon, Alphabet, Microsoft. They are all trading at PE above 35. Some of them even above 45, 55. And then we have Facebook, which is trading at PE of 26 and forward PE of 19. Not to mention that they have more than $50 billion of cash on their balance sheet, they have zero debt, and their business will only grow in the future. They are also investing in commerce, they are also investing in VR, in augmented reality. They are issuing new VR headsets, glasses with augmented reality, etc., etc. So they are performing extremely well, they are investing in future. And you can see also their stock is trading right now at around 266, and it used to trade about $300. So it's around 15% below its all-time high. And they are delivering all-time record results in terms of revenue, profits, and all other metrics. So yeah, I really feel Facebook is one of a lifetime deal. And in the next 3 to 5 years, Facebook will deliver at least 15% return on this current price. I cannot guarantee it, of course, there are some risks around Facebook, but I'm extremely confident when I'm investing in this company, and I'm 100% sure that if price of Facebook stays at these levels, in next 2 or 3 months I will increase my position in it additionally.